Hi everyone, my name is PK and here I have Adel, who's a client of the Property Investment Accelerator. In this episode, we'll be going through Adel's journey from not knowing anything about property investing, being at university, doing his thesis, and going into investment banking as an intern, to then doing the course, buying properties under his own name, to then having so much confidence that he's buying literally, more than 10 properties for family and friends, and now he's becoming a buyer's agent. Like that whole process, it's only taken him 2 years or thereabouts from when he started the course. And we'll be going through his exact deals. And because he's basically almost a professional now, he'll be sharing with you so many tips and tricks and hacks about how he got these amazing properties, positive cash flow, huge growth, wait for the numbers, with subdivision potential, under market value. He's not a buyer's agent just yet, but he is looking to become one. So he's going to hopefully share with you so many gold nuggets that most buyer's agents won't tell you, okay? Because it's detrimental to their business, but he will, because he's not quite a buyer's agent yet, but he's a super nice guy. And actually he's in my team. I only hire, successful clients that want to work with me. And he's actually part of my team. You might be thinking, well, he's just going to make numbers up because he works for you, PK. We don't work like that. All right. So listen for the next 10, 15 minutes and get a whole bunch of value.
Do you want to achieve wealth and passive income through property investing? PK Gupta, host of Oz Property Investment Mastery, will help you achieve passive income by buying top 5% growth and positive cash flow property and building a portfolio using data without you wasting months of time doing research, spending weekends at inspections, or dropping $10,000 to $20,000 on buyer's agents each time. So if you are confused and overwhelmed by the amount of contradictory information available online and don't know where to start, then this show is for you.
Thank you, Adel, for making time.
Thanks, PK. Thanks for the introduction.
No worries, man. No worries, man. All right. Well, like I normally do with these client interviews, let's just start, if you don't mind, Adel, with, we're talking about it before, like who were you, or it kind of seems existential. Like, what was your journey before property investing? And like what kind of led you to buy and do the Property Investment Accelerator program?
Right. Awesome. So I started, as a young teenager going into uni, not knowing exactly what I wanted to do. I went to medical science first, but realized this wasn't for me. Then I kind of shifted to finance, went to work in a derivatives broker, got my internship at an investment bank. Once again, realized I like numbers, but it's just things aren't really clicking for me. And then I was really looking into property because I wanted to get rich. I want to get wealthy, right? So I know you can make a lot of money in property. So I started looking at property, podcasts, what's out there. Sooner or later, I eventually came across PK. This is about just under 2 years ago. And then, I did the Property Investment Accelerator course. I started off at first, not confident at all. I was scared. I was, thinking if this is going to work or not. But from the course, I bought my first investment property. I bought it in Paralawi, South Australia in, I think, 2020. And I bought it for $260,000. And the rent right after was $400 a week. So $260 in capital city, 15 minutes from the beach is quite crazy, right? And then, I've just always, I guess, applied what PK's taught me throughout the course. I've just, been diligent in what I did, and I had a passion for property, and I just kept pushing forward with it. A lot of confidence that comes working with PK, and also being a student of PK, because you have the the weekly group calls, you have the support along the way, which is really helpful. And from my first investment, about 3 months later, I was able to withdraw about $70,000 as equity to help me get my second property, which was in Lavington. So from the very first property, I paid about, I think, $50,000, and did with that $50,000, I was able to recycle that and get a second property. So I didn't have to use any other money other than that first investment, which then I was able to extract equity and get the second property, which was also positive cash flow. So that's currently rented at $440 a week, and the purchase price is $330. And that all happened within, I guess, 6-month period. And coming out of uni and not having that much money, my base salary isn't very high at all. So for me to have, 2 properties within, a few months apart, it really made me realize what is possible. And it gave me the confidence that if I could do this for myself, I might be able to help my family and friends. And soon after, I was able to buy a property for my sister, which I think is till now one of the best deals I've bought.
It's better than your own deals, I reckon.
I think so, yeah. That property, the median house price for my sister's property, which is in East Albury, is around 550. And yeah, through the things I've been taught in this course and through, I guess, some things I learned along the way, I was able to buy that property for $390,000. Beautiful block, 900 square meters, and renting out for $440 a week. My sister in the past had used a buyer agent for her very first property. Her portfolio was negatively geared, and from the property that I bought her, it actually has turned the whole portfolio positive. After that, I was able to buy my cousin a property in Lavington as well.
I love it how we can talk about suburbs, by the way, because we're not buying in these suburbs anymore. So normally we can't talk about suburbs, but I'm glad that you're sharing them because, yeah, for anyone who's watching, you can go back and verify this for yourself. What Paralowie has done, what Lavington has done, what East Albury has done. Sorry, I cut you off.
Exactly. Yeah, we normally, the suburbs are, as students, we work hard to get those suburbs, and it's only, I guess, private information, but I'm more than happy to share it now because, like you said, they've done so well. And then, yeah, so my cousin, he had a bit of a different goal of what he wanted to achieve. And I got him I think it was just under 900 square meter block that is B4 zoning. B4 zoning in New South Wales means mixed commercial use. So the property at the moment is costing him almost nothing to hold. There's already going to be growth in the property, but now he's going to unlock on future value from it because of its zoning. B4 zoning, yeah, like one of the highest zoning you can get for commercial use. So amazing. Soon after, I think word got out that I was buying these really good deals, all positively geared, all capital growth, and the system is working. So family and friends started buying property in Brisbane, in Slacks Creek, in Boronia Heights, in Crestmead, and then also bought in Mount Austin in regional New South Wales, bought in, what else? Bundaberg, and some other key areas around Australia that are still growing. But yeah, all of these properties, to be able to start from a uni student and then to almost have a new career where I'm helping not only my family and friends, but people, who are being referred to me and actually change their life or let them know that, through assets, you can kind of beat inflation or you can beat, what's going on with the interest rate rises and create a second income for yourself and have a buffer. It's really impactful and it's really profound. So I'm enjoying the journey and there's so much more to come.
Yeah. I think the greatest thing, and we were talking about this offline as well, the best thing is that with property, you started off with $50,000, you got the first deal, and your second deal, you didn't need to chip in any more deposit. It's just about getting that first deposit. And then if you buy well, it grows in value. I think that Paralowie one that you bought for $265 or something, it's worth like $410 now. So you're able to just buy multiple properties after that, just refinancing, taking equity out, right? Go over to the bank or through a broker. They'll give you that equity, that growth, in cash, and that becomes your next deposit. And now I think you're on your third property for yourself, once again, without having it put any of your own money further into it. And for a young person, obviously you're young, like that's a game changer. And you do that for the next 10 years, then I tell you don't have to work a day in your life after that.
Yeah. So, yeah, definitely. It's all about buying smart, following data, following a system that actually works. And buying objectively. And yeah, I'm about to get my third, but by the end of this year, I'm pushing 4, possibly 5 properties. And once again, like I said, my base salary isn't that high. It's, just around the average Australian, income. So to possibly have 5 properties at the end of this year, just because I've learned to invest and invest well, is life-changing.
And sorry, I don't want to put you on the spot, Adel. How old are you?
28.
There you go. And it's one thing to buy property for yourself, because it's your own risk. You're only benefiting or, being a detriment to yourself. There's no external person you're impacting. But then to help others is kind of a whole new ball game because, it's their hard-earned money. It's someone else's livelihood at stake. It's someone else's finances. A lot of pressure, a lot of responsibility, I should say. So, you're very young, you've done your university, you've bought some properties for yourself. I know you're not technically a buyer's agent just yet. And so therefore you're just helping family and friends, within your close-knit unit, your family. But what what's given you the confidence that you're able to spend your family's money on their behalf and buy good assets? Because, like if it's me and I had this limiting belief when I first built my business, like I had built a huge portfolio for myself, but it was like, people are giving me their hard-earned money. Is this actually going to work? Is this, it's a lot of responsibility. You don't want to take people for a ride. What kind of got you? I don't know if you faced that mental hurdle or battle, but what kind of got you over that confidence barrier to help other people?
Oh, definitely had that fear. Like, oh, okay, this is not my money. I've got to be careful. I've got to make sure I cross all my T's and dot all my I's. But it simply comes down to education. I was educated by, a good mentor, yourself. The course is so comprehensive. And I'm not trying to say this just because, it works, right? It works. So I was able to learn how to buy well. I was able to research suburbs, research properties, how to negotiate, how I can add value to a property, what structure to be putting him in, and to test it on myself and see it working for myself, and then to test it again with my sister and my cousin. That that confidence and being able to apply what I've learned only got stronger, as well as having a mentor and having a support system that I could rely on, and having a community that I could reach out to and ask questions, which is available in the course. It becomes like a hub where you're stuck you're in this cycle where you're always learning, always being challenged, but always being redirected as well. So being educated, following a system that works, having guidance by someone who's done it, they're the three things, plus the support to really give me the confidence to say, hey, I can help you.
Yeah, no, I appreciate that, Adel. And for those people who are watching who may not be interested in the course, and that's fine, and actually just want to do it themselves, like what's some advice or some tips that you can give them, perhaps around buying interstate? Because you're based in Sydney, you've bought in 3 or 4 different states now. What's some advice that you can give them around buying remotely without needing to catch flights, and of course not needing buyer's agents, perhaps around the data as well, how to actually find good suburbs? I mean, almost anything is growing right now, but the true test is when this boom finishes, which suburbs are going to continue growing. And that's really where data comes in. And perhaps the third area, let me think of it real quick. The thing that people struggle with is assessing individual deals. So even when they select a suburb, they're just trawling real estate and domain. They're not sure whether the property is good to buy or not to buy. So I don't know, those are the kind of 3 areas: buying remotely, suburb selection using data, and then deal assessment. Is there any kind of top tips or tricks from your own experience now that you can share openly with people and hopefully give them some value?
Right. So buying remotely. So you need to have the right team around you, or interstate. So you need to learn how to qualify the correct property manager, someone who's going to care about the property just as much as you do, who's going to give you honest feedback, who doesn't just want your money. There are certain questions you have to ask a property manager, like what's their vacancy rate like? What are they willing to do to make sure that your property is the right one for you? You don't want to have issues later. You want to find the right tenants. So having the right property manager, but also finding the right building and pest inspector, and how to qualify the right building and pest. You don't want to miss something which can cost you a lot of money later on. So to buy remotely, you need to have a mortgage broker that will also help you to understand your lending structure. You need the property manager who will help you, on the ground, your eyes on the ground, but also, I guess, provide honest feedback. And you need a building pest inspector. You need to qualify, that will also, is diligent in their work. So buying remotely, you need to have the right team around you on the ground that you can trust. The second question was around the suburb, finding the right suburb. So this is pretty much, I guess, the kernel, right? This is one of the hardest things. There's so much information out there. How do you find the right suburb? And honestly, without knowing what data to look at, can be very tricky. But I guess for some general advice, you want to find a suburb where, I guess is somewhat landlocked, that there isn't much supply coming onto it soon, including in surrounding suburbs. You don't want to buy in a suburb where, there's a 500, lot subdivision being brought on with new homes. You want to be looking at, I guess, the owner to rent percentage, renter proportion and owner occupation. You want to be looking at surrounding suburbs. You don't want to just find one suburb that's growing, but you want to find the cluster of suburbs that are growing.
Yeah, really solid point.
Yeah, because it's very important to have, I guess, a growth corridor. There are so many intrinsic factors. You want to be also looking, things on days on market, and what's the right numbers you're looking for days on market. What's the vacancy rates? And importantly, you want to be sure that the rental yield, is growing as well. It's not just having capital growth and no rent yield. If rent is growing as well, then that's super important. Also looking at things like, vendors looking at discounting, what's going on the floor. But yeah, it's when you're investing anywhere between $3 to $1 million in a property, you can't just rely on, what I'm saying on here or just random information on Google or realestate.com. Like, it's one of those things where you have to get educated, or I personally think you spend a little money to avoid making a massive mistake, because properties may rise, 5-10 years, but if you can calculate what properties are going to rise when and how the suburbs going to perform now, 2 years, 5 and 7 years, and even 10 years, and have something that's positively geared, you're only going to grow your portfolio. You want to also be, you want to have a property that's, I guess, interest rate proof as well. So if it's good, has good yield, then you're not going to have to worry about those interest rate rises, which can be good for the economy. But
yeah, these are solid points, and thank you for sharing them, because for everyone who's watching and listening, I'm not just what Adel said, like, most people won't actually share with you that kind of information. And I know so many of you, you keep missing out on properties. It's because you've either bought in a suburb that has already grown too much, or it's about to grow, but it's too hot. And so some of the data factors that Adel has mentioned, and many others that we teach in the course and the system, the whole idea of advanced property investing is, okay, let's buy in a hot suburb, but also, how do we identify a suburb that's not hot yet? How do we identify something that is going to become hot, but how do we get there before the herd? And I think that's what you did, right? In Paralowie. I mean, try to find a good property and buy it at a good price in Paralowie right now in Adelaide. I mean, that's why we're talking about it openly, because, good luck to you. But you got there at the right time. And there's always a good suburb to buy, regardless of year, of month, of cycle. It's just about using the data to find it. So thank you for sharing. And then perhaps like the third point around, okay, well, let's say we found a good suburb, let's call it Lavington in New South Wales. How do you, maybe just some tips for people watching, how do we find the right property? Because, there might be 20 properties for sale in Lavington in any one given week. How do we find the right one?
Yeah, definitely. One way to buy is, how I think is, would a family rent this home? Or who's going to rent this home? So you want to make it as appealing as possible. So you want to avoid areas or pockets where, for example, there might be housing commission. You want to avoid areas where there's a main road or thoroughfare, which might not be safe for the kids, or there might be too much noise. You want to avoid T junctions, even things like, and it's super important. A lot of Thai agents do this, checking for flood zone or even bushfire zones. I know some people who in Brisbane who are unlucky because they didn't check the flood zoning, but that's super essential to check that. Even street appeal, having like the power poles. Obviously, with some things there are trade-offs. What's important to you is at the end of the day most important. But even then, once you do find the right property, how do you actually lock it in? And how do you make sure you're not overpaying? So being able to independently value the property, regardless of what the listing price is. The listing price is just a number. That's what the agent and vendors want. Doesn't necessarily mean what the price is. So being able to, I guess, either negotiate or actually pay what is worth the value of the property. Also looking at, land to asset ratio, which is also an important factor. But yeah, generally when I'm looking to buy a home, I look at open floor space, just something that a family would like to live in. So I have a wider audience to I guess, appeal to. And you want to be buying properties that are suited to that suburb. You don't want to be buying, as PK says, be the hero and buy a 5-bedroom home where the 3-bedroom home is, what is most in demand. So buying correctly as well and knowing that.
I mean, once again, like, thank you for sharing. It's just, there's no checklist that you can get free online that has even half of the things that you mentioned there. And of course, there's many other things to look at as well. But I think the best thing is that you can do all of this completely remotely. You don't need per se a buyer's agent. You don't need to catch a flight and walk the street or see the house everything can be done for you and with you by the team members that Adel mentioned before, and through online tools that are easily accessible, basically free of cost in most cases in Australia. And that's kind of really just 101, but also advanced property investing. So thank you for sharing that. So, you've bought many properties now for yourself, for family, friends. I think before you were mentioning offline that, subject to settlement, there's about 15 or 16 that you helped folks with, which is great. And that's just within 2 years, right? And 2 years ago, you knew nothing about property. I just want to hammer home this point because people lack confidence. There's always a million excuses of why they shouldn't invest. I don't have any experience in it, or it's the wrong time to buy, or interest rates, or inflation, or, my friend said, just buy this off the plan apartment or house and land package in Western Sydney or Western Melbourne. That's what all my colleagues and family is doing. Let's just do that. Or, like investing doesn't work, can't find a tenant trashes the place, the economy, there's always the reasons. But I feel it's a mindset thing, right? It's a mindset thing, and the mindset and confidence are the two things you need to actually be successful in property. And that's the last question I'm going to ask you, or ask for your advice, actually, Adel. What would you say to someone who, let's say they're on the fence of doing the Property Investment Accelerator program, or even just on the fence of buying a property, like regardless if they know about me or not, or are interested in me or not, but they're kind of second guessing themselves. They're on the fence. They know they want to build wealth. They know they want to build passive income, support their family, but they just have this analysis paralysis, lacking confidence. What would you tell them?
Right. I could speak so much about this.
Go ahead.
We're only limited by imagination. Like if you dream of something, there is no reason why you can't achieve it. If you want to stop working, if you want to spend more time with your family, if you want to spend more time on your hobbies or business, if you don't like your boss, like, you could do whatever you like. It all comes down to you. So if you feel like you're stuck in your ways and something needs to change, unless you make that decision, nothing's going to change. So sometimes we just have to come up with the courage to take a step forward and change our circumstances. In terms of buying, it's like, if you buy the right asset, we live in a world where you need to buy assets, because if you don't buy assets, you're going to get left behind. Inflation is going to eat you up. You can't save quicker than what an asset will grow, and you need the right assets, such as property, which are quite safe as well. So I think it comes down to just taking action. If you're already thinking about doing something, then just do it. I always go back to Nike, like, they've nailed it. Just do it. Like, if you're thinking about it, just do it. Because when you come to make an investment like a property, that's going to be literally one of the most expensive purchases you ever make in your life. So why not do it in a way where you avoid mistakes and have someone help you along the way? And I can say this because, as you can see from PK's reviews online, like, his system works. People trust him. I trust him. And I think one of the reviews I left on Google was, "Dear future investor, if you're thinking about doing this course, just do it." So my review is on Google. Go read it. It's there, and it's an honest review. Like, I remember I had just bought. I was so happy, and everything I said there is true. So it's you'll find it on Google. But yeah, you're only limited by imagination. Going back to that point, like, don't let fee stop you. Fee is not a real thing. If you can do something that's going to better your life, then I urge you to do something about it. And look, for me, one of the best purchases I ever made, and like, just talking about it puts a smile on my face, buying for my mother. Oh, so my mom recently just settled in February. I can't say where yet because the suburb is still very hot. It's growing. It's a top tier suburb. But my mom, she's nearing retirement. And I know she needs something that's going to help her pay down her mortgage at her principal place of residency. So I know this investment that she's just bought, which, by the way, we bought it for 363, and the rent is 460 in a capital city.
In a capital city?
Capital city.
Okay, so I don't even know about this one, guys, so I'll ask you the suburb later.
It just settled, no longer. So yeah, that's the numbers are amazing. The suburb's amazing, but I know this suburb is going to grow so much that when mom decides to sell, if she does decide to sell at some point in the future, not only will it help her, pay her debt in this property, like where she lives, but leave some for her. And it doesn't cost her anything to hold. She's making money holding this property. So yeah, if I can help my mom, if I can change my mom's life, and you're thinking about it, then you just gotta ask yourself what's really stopping you. Because until you decide to do something, you're gonna live the same life. You're gonna go to the office. You're gonna not see your kids or whatever it is for you that you're not getting. You have to make a change. And I'm glad that I did.
Amazing. Amazing. And I just want to add to that, you can't be what you can't see. If you cannot visualize something, then you can't achieve it. You can't become it. So that's one of the reasons why I do so many of these client interviews, to kind of just, put my clients very proudly actually on a pedestal and say, here's someone who, of course, being rich or becoming rich has negative connotations, but we all want to get ahead, for whatever reason. Here are people who are getting ahead, who have got ahead, and helping other people get ahead. And, you can't be what you can't see. So if you're still watching, still listening to this interview, here's a really good example. Adel, someone who's super humble, not from a privileged background or anything like that, and just hustling, getting ahead in life, and then helping his family and friends, which is a really satisfying feeling. And even if you're not in your 20s, we have tons of clients who are in their 40s and their 50s. I think the oldest client's 62 or 63. Like, age is no barrier. You can still achieve things. Of course, you can't retire rich in 5 years' time if you're 63. Let's be practical. But there's no reason why you can't improve your financial circumstances. Okay, so I just want to say thank you, Adel, for making time. And like I said at the start of the interview, guys, that Adel actually works in my team. So if you book a call to enroll in the Property Investment Accelerator mentorship program, maybe Adel's one of the people that will call you, and hopefully, that's kind of unpacked his story and you can kind of build some resonance with him. But yeah, thank you so much, Adel. And of course, like I always say to you, congratulations.
Thank you. And thank you so much for your help along the way.